Hey folks, and welcome to the Pipnotic Symposium for the 18th of September 2023. Today we're just going to run through a couple of things. I want to focus on something that's pretty important because there seems to be a bit of discussion about one of the settings in the software called LastBar. And so just going to explain what that is, what it does, and why it's important. So LastBar is essentially telling the software the candle number at which to stop counting. So if it's set to 3, it's going to look at the most recently closed candle, which is this blue one here, and it's going to go back 3, including this one, 1, 2, 3. And if there's a pattern within these 3 candles, then it's happy. If there is not a pattern in those 3 candles, it's going to move on to the next asset. And the good thing about doing this is, if you followed along with the other videos that I've showed here over the course of the past couple of months or so, is that when we get these patterns that emerge, matter of fact, I'm just going to go to Twitter quickly so you can see what I'm talking about. Okay, here we are. Okay, so a lot of the trades that you'll see on Twitter are being filled within a couple of periods after a zone has been established. So if you look at this particular pattern right here, you have the zone. This is the area of supply. Okay, and for those of you who are not aware of what it's doing, the software is looking for liquidity distribution patterns in time series data, and it is looking for a very specific pattern that it's quite good at identifying, recognizing, and when it sees that pattern, it's scrutinized via a rule set, and if it fits the rule set nicely, then it'll draw a box like this on the chart, and there'll be a small line which points to a significant high or a recent high or a low, and this line is just showing you the market structure that was compromised when this area of, in this case, supply was formed. And so notice here that, I mean, when this box was drawn on the chart, this red candle here had just closed. So from this red candle and on, none of these candles here existed. Okay, so the box was on the chart. This red candle is closed. This one just opened, and price came back one period after the formation of this pattern, and the trade was filled here, and then we kind of sat around on that area for a little while. We went a little bit deeper, and then we finally gapped lower and moved towards profit. Okay, and this happened within, I mean, one period. Okay, so if we have a LastBar, for example, it'll look for, that's set to 3. It'll allow the software to wait for 3 candles to close before a zone is tested. If the zone is not tested on the open of the 4th candle, then this box will disappear. And this is the algo trader, the buy and sell zones algo trader. Okay, and this is super powerful. And when you focus on bleeding edge price, I mean, you're also riding the wave of sentiment in that moment. Okay, so let's take another example. Here we have another one here. It was formed here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So 11 periods, 11 hours after this area of demand was formed, price filled that order. Okay, what happened? We had a lovely response. In the meantime, we had a nice area here, a supply that was formed. It was filled 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 periods after its formation. What happened? A lovely reaction. So if we look again here, this is a nice one from yesterday. This is the American dollar, Norwegian krona. So this candle right here caused the formation of this zone. 1, 2 periods afterwards, it was tested. We had a massive reaction. The zone was actually tested 2 times, as you can see. So the software is not drawing these green and red dots. I'm adding these just to show you where the trade would have been filled. We have the same thing here as well. Okay, we had a zone here. It was formed. It was formed and qualified when this red candle closed. 1, 2 periods later, price came onto it and we moved away. Okay, we have another one here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 on the 12th candle. Okay, here we had another one here. This is a 4-hour one just here. 1, 2, 3, 4, 5, 6. Price came back to it within 6 periods. We had a small reaction. Price went through this child to the parent. Okay, this is expected behavior. which is why we would not have traded the zone just up here, because this is not demand, it is a reaction to demand. Okay, hence the whole parent-child relationship. Okay, we move on. We have another one here. 1, 2, 3, 3 periods after the formation of this 4-hour demand, price tested. We had a reaction there. We continue. 1 period after the formation of this hourly demand, price came back and we left. We had another one here. I can't see what happened to the left, but this was another zone here that held. We had another one here. This blue candle closed. 1, 2, 3, 4, 5. On the 5th period, 5 hours after the formation of the zone, price tested it and we ran. This one here, 2 periods after formation of this hourly demand, price ran. 1, 2, 3, 4, 5, 6, 7, maybe 8 periods after the formation of this hourly supply, price runs. This happens all the time. 1, 2, 3, 4, 5, 6, 7, 8. So 8 periods after the formation of this supply, 4-hour supply, price runs. Okay, and you'll notice that this is happening over and over again. We had another one here. This one just here, 1, maybe 2 periods, 2 hours after the formation of this hourly zone down here, price tested it, and then we ran. Okay, super predictable. And so what the software is doing, that particular configuration option, the LastBar parameter, it's telling the software how many periods, which for the hourly chart would be hours, for the 4-hour chart would be 4-hour bars, are allowed to pass since the formation of a supply and demand zone before it will no longer look at that zone. And if we go and have a look at the dashboard, okay, here we are, we go to the supply and demand dashboard, and you can see here we have all of these zones, and they are sorted after age. Okay, so the younger, the better. We want zones that are not terribly old. I think the maximum is 20 periods, as you can see here. But if price has not touched it within 20 periods, well, then things have likely changed in the meantime. So what we're doing is we're just looking at these little areas here, and we're being very mindful of this in here, these values here. Ideally, we want to see the young ones, the American dollar, the Swedish krona. Let's have a look at that on the 1-hour chart. Okay, here we can see. Okay, it's formed. We have an area here. The algo liked it, so put in a pending order here. Price came down to it. We have not quite moved into the zone. We might not. This is very common that you just come to the edge of the area, the market structure that facilitated the qualification of this demand here, and then we turn from there. So we might not go down into this area. But this is just a very common signal, or a very common price structure that we're looking for when we're qualifying these areas of supply and demand. Okay, so that was the LastBar setting. If you have any questions about it, please let me know. Thank you so much for watching.